Prime Property, your weekly real estate reckoner. I'm Nayanthara Rai, and this is what we have on the show today. A surprise Diwali gift from the government liberalizes FDI norms. Experts say the radical changes could prove to be a game changer and revive India's property market. We find out why high net worth individuals are choosing to buy homes in Dubai over anywhere in India. Builders appeal to the Finance Minister Arun Jaitley to give tax breaks to home buyers. We'll get you the wish list for Budget 2016. This week, the battered real estate sector got a surprise Diwali gift from the government. The government eased FDI norms for construction and introduced radical changes. The new norms have done away with many preconditions. For example, the government's removed the minimum floor area of 20,000 square meters for attracting FDI. The minimum capitalization of $5 million also been set aside for FDI. For the first time, the government's allowed FDI to buy completed projects. So 100% FDI is now permitted under the automatic route in completed projects, that's townships, malls and business centers. Foreign investors can now exit a project prior to its completion but post the 3-year lock-in. No lock-in for hotels, hospitals, SEZs, educational institutions, old age homes and NRIs. It's allowed the stake transfer from one non-resident to another. This means one foreign investor can now sell out to another foreign investor, and thus the government's allowed a new exit option. Here's our editorial take. These are indeed sweeping reforms, especially the one allowing foreign investors to buy complete real estate assets. This could be a game changer. This move would allow cash-tight builders to sell their existing assets to foreign investors and thus clean up their balance sheet. Plus, since the FDI preconditions for minimum size of 20,000 square meters being done away with, builders can sell whichever project they like, however big, however small. And once builders get access to funds, they should be in a better position to complete projects in time, or at least more on time, and that will augur well for home buyers. That's our take. And here's what law firm Luthra & Luthra has to say.
If one was to look at the real estate sector, 2 or 3 changes are very significant. The first one of them being, of course, that I think a lot of confusion persisted prior to this clarification as to whether FDI was permitted for developed assets. If you would recall, the last spate of FDI policy liberalization, although did provide some sort of clarity to this issue, but practically when investors went to seek clarification from the government, they refused to bite the bullet. This would mean that a number of real estate developers which are highly leveraged would be able to take advantage of this policy change and be able to monetize some of their developed commercial assets and be able to, deleverage their books. Parallelly, the foreign investors as a natural corollary would now be able to access, assets which are developed and where there is no execution risk and where there is a consistent yield that they can enjoy. So I think it's a win-win both for the real estate developers and the foreign investors.
Vaibhav, this move by the government of allowing foreign investors to buy completed real estate projects, isn't that also good news for the banking sector? Now the banks have a new option to sell all of the collateral they're holding of bad debtors. In the process, clean up their balance sheet and maybe make home loans cheaper. What do you make of this?
That's absolutely right, Nayanthara. Banking sector is going to be a clear beneficiary out of this reform that's happened in the real estate sector. As most of us are aware, the banking sector in India is fairly exposed to the real estate sector, has a high degree of exposure. And with this enabling change, allowing real estate developers to be able to part with their developed assets and enabling more foreign capital to come into the country will only help and ease the stress that number of these banks are facing and be able to allow liquidity to come back with the real estate developers. That would also mean quicker execution of real estate projects and better turnaround timelines. And overall, that should mean that banks, will now be a lot less stressed in terms of their credit exposure to the real estate sector at large.
Exactly my point. Once banks start cleaning up their balance sheet, maybe they'll pass on the benefit to the consumer and reduce home loan rates. Now we'll talk to you about the new exit options, or rather the liberalized exit options in the new FDI regime. What do you make of it? Do you think enough has been done? Is it going to restore the faith of foreign investors?
In the previous prescription of the FDI policy, although the investors did have a lock-in, but the lock-in was actually linked to development of trunk infrastructure. And trunk infrastructure basically means basic support infrastructure such as drainage, lighting, and things of that sort. Now, if you would look at any typical real estate deal where a foreign investor, like a private equity investor, has put in money as a financial investor, besides contractual commitments, there was really not much in the foreign investor's control to be able to drive the company to be able to develop such minimum infrastructure, and that was absolutely quintessential for enabling the foreign investor to exit. So that was becoming a bit of a challenge for foreign investors, because they were getting locked into these projects for much longer than their commercial horizon enabled them to do so. A number of these private equity investors usually would put in money out of their different fund pool vehicles, which themselves have a limited life cycle. So now in this new prescription of the FDI policy, they have very clearly clarified that trunk infrastructure or no trunk infrastructure, after a period of 3 years, foreign investors can exit from the project. And of course, if trunk infrastructure gets developed even before that, they are welcome to exit even before 3 years.
So finally, clarity as far as that exit option goes. Vaibhav, something else that the new FDI regime entails is it allows a foreign investor to sell to another foreign investor. I know a lot of private equity firms, the foreign private equity firms, are delighted by this move. The Indian promoters should perhaps also be a happy lot. They don't have to buy back the private equity firm's stake when they want to exit. How significant do you think this is?
A number of these investors essentially channel their funds through fund vehicles, and those fund vehicles have a limited life cycle, and there is after a limited time period obligation on these fund vehicles to repatriate the capital and the appreciation thereon back to its investors. So if a foreign investor is invested into a project and they believe that the project has great potential, but their life cycle just doesn't allow them to stay invested for a longer time period, they will be able to sell out to another foreign investor without being constrained by these lock-in restrictions. As you're aware, in the Indian scenario, there is obviously not so much capital which is available, and India is capital deficit. So exits to domestic investors was always a challenge. So this is a very strong move, enabling and allowing foreign investors to be able to structure their investments in a way where they have clear visibility on exits at the time when they're investing.
Vaibhav, I'm going to put it very crudely. Has the government actually allowed trading of real estate assets? I ask you this because now there is no bar on size when it comes to attracting FDI. There is no minimum capitalization norm. It's allowed in foreign investors to buy completed assets. It's allowed foreign investors to sell to each other. So in a sense, has the government actually allowed trading of real estate assets?
Well, I wouldn't put it that way, because if you look at the policy prescription, they're still very clear that the foreign money has to come in for construction development purpose and no other objective. So from that point of view, then the foreign money is coming into a project for the purpose of construction development. I don't think that this would mean that as a result of this policy change, it will allow trading in projects. What this only does is it facilitates one foreign investor to be able to exit and enable other foreign investors to participate, which was not permitted earlier. I would see this change only to that extent, and this is not intended to have a sweeping effect of allowing foreign investors to be able to trade in real estate assets. In fact, they've very clearly articulated that the lock-in requirement of 3 years would very much apply, and you need to develop the project for the investment to be FDI compliant. Of course, there is an exception to this rule, which is for developed assets, but there the whole idea is to allow foreign investors to be able to run O&M operations and also at the same point in time own those developed assets for different reasons altogether. But overall, this policy continues with the tone that the investment is going to be allowed only for construction development purposes and no other reason.
And do you think the new FDI regime, a more liberalized one, is actually going to help affordable housing? You know, a lot of foreign investors wanted to invest in affordable housing in India, but they felt the government policy didn't make it a lucrative option. So do you think that's going to change?
So I think, Nayantara, this particular policy liberalization will, in my view, also benefit the affordable housing sector, and I'll tell you why. If you would recall, the last prescription in the FDI policy had laid down a certain criteria, and if you were only satisfying that criteria, was then the benefits available in terms of the lock-in, the minimum area requirements. None of those would have applied only if you were an affordable housing project in terms of the criteria that the government had prescribed, which was that at least 30% of the funds have to be committed for a low-income housing project of a particular area and a particular size. And number of real estate developers had complained that those parameters are very narrow and don't leave too much space for developers to come up with different projects to cater to different requirements. I think with now having carte blanche removed all of those restrictions and not being applicable to any segment of housing sector in particular, I think this would also mean that affordable housing projects and the challenges that they were facing earlier to be able to pigeonhole themselves into a particular kind of project, I think those sorts of limitations will no longer be there. And of course, this would mean easier access for capital for low affordable income housing projects as well.
My final question to you, Vaibhav. I know it's early days, but since the announcement of the new FDI regime, what's the reaction been? What do your clients have to say? Is there any buzz? Are they enthused by it? I know it's early, but we wanted to do a mood check.
So I think these are still early days because the policy just got announced on Tuesday, and in the backdrop of Diwali, there's not been so much of time. But yes, I think a number of our clients have already written back. A number of investors have sent us emails asking us more questions and trying to understand better about what's happened. And I think the more number of people are understanding the depth of this change and the impact that it may have, I think they all are quite excited. And we do believe that in times to come, this will lead to a very high frequency of deal making in this space. So I think overall, there is a fair degree of excitement and positive feeling towards the sector at the moment. And we hope this momentum only builds up to translate into active deal making in the space.
There you go. The easier FDI reforms could indeed be a game changer for the real estate industry. With that, time for a short break. When we return, we're going to tell you why Dubai's property market is scoring over India's. Stay tuned.